All right, Elon Musk saying this might be the most important year in the history of Tesla, but let's focus on these numbers at first. Miss on revenue, miss on EPS, miss even on margin. That's something that Tesla really kind of touts as having great auto margins. It seems like the stock's moving higher on this idea of full self-driving in Austin by June and California and other regions by the end of the year. Did you see something else in this report that would make the stock move higher?
No, I mean, you pretty much hit on it. And even that clip we just heard from Elon, he played the hits. And I think what the bulls are the bullish narrative right now for Tesla is that it's just a diversified play on AI and robotics. And it's sort of that simple. So he highlighted full self-driving, Optimus, also how AI is going to play a big part in the company moving forward. And numbers are sort of, just being tossed to the side and just more evidence that the stock does trade more on hype versus fundamentals. Because as you said, auto margins ex credits, I think they were the lowest since 2018. And so we'll see, right? That's sort of what Musk's plan was, saddling up next to Trump. And let's pull out of the red tape and see what Tesla can do in terms of the FSD and rolling it out to different cities. And hence why you're also seeing negative kind of ripple effect for Uber and Lyft this morning as well.
All right, let's go to Meta, another stock that's moving higher this morning. Really strong quarter this quarter, but I had some questions about the guidance. I mean, the mid-range of the current quarter guidance was below estimates, no full-year guidance. Should that be a concern if you're a Meta investor?
Yeah, I think to a degree, but I mean, they're typically a little bit conservative on their guide as well. And I think more importantly, the quarter itself was just fantastic. They're firing on all cylinders. On the flip side, their operating margins, I think, were the highest in over 5 years. And more, and ad revenues accelerated versus tough comps. And Zuckerberg, he's been doing it on his podcast circuit of late as well. His message has been very straightforward. He's keeping it simple. I thought it was very savvy for him to de-risk the CapEx, last Friday when DeepSeek narrative was starting to develop. And he's making it pretty clear that the businesses are firing on all cylinders, and AI is going to help them just kind of, work the flywheel of the business and just continue to monetize it. And hence why it's probably the cleanest story within mega cap at the moment.
So I want to ask you about that CapEx spending. Stood firm on this one, still 65 billion. Why isn't that an overhang after this DeepSeek development? I mean, isn't DeepSeek supposed to kind of reconfigure how we look at CapEx and how we look at this idea of using scaling capital to get an advantage in this AI race?
I think potentially, but I don't think, I'm pretty sure, Nadella has been very vocal as CapEx as well over the past couple of weeks. He was talking about $80 billion, just 2 or 3 weeks ago, Zuckerberg a week ago as well. I think clearly these tech leaders are fully aware of DeepSeek and what's going on. But I think the reports yesterday sort of are reflection of why these guys aren't really kind of flinching, because I heard there was reports that DeepSeek accuracy is only around 17%. Mm-hmm. Most other models are north of 60 to 70%. So there's still some performance issues, I think, that are unclear at the moment. And for now, I think it's easier to kind of walk it back in the next quarter or two. But for now, just stick to the playbook. And investors haven't been punishing anyone for overspending in AI.
All right. Well, speaking of sticking to the playbook, Satya Nadella, Microsoft sticking to their playbook, maintain their CapEx guidance. But the cloud business, I don't want to say it was under pressure, but missed estimates for this quarter, guidance a bit under the estimates for next quarter. Is that possibly concerning? I mean, weren't they supposed to have the lead when it came to generative AI? Weren't people supposed to be flocking to Azure to get access to OpenAI and things like that? Why are we seeing this business actually miss estimates and even the forward guidance being, less robust than people are expecting?
Yeah, I mean, sadly, Microsoft only trades on Azure. That's what investors are laser focused on, and they kind of called out, supply capacity constraints and issues in the non-AI portion of their business as well. But it's just not what people were hoping for. And Microsoft, I think, has been a stock that positioning drives a lot of it amongst institutional investors. For most of 24, it was a funding short. Azure was just sort of stuck in the mud. But it flipped. This positioning has flipped here. It was a consensus long in this print. Now, people are waiting for a re-acceleration of Azure, but the timing is still very unknown. So, with software becoming a bigger part of the AI narrative, and we're seeing that in 2025 with the rise of agents and kind of lowering inference costs. I think there's just a desire to be long, names like Salesforce and HubSpot and Atlassian. Whereas again, Microsoft, they're just not really sending the right message that Azure is accelerating, and Copilot adoption's been disappointing as well. And whereas Salesforce and their agent force had just kind of been sucking up all the air out of the room.
Right. Obviously, we had a big shakeup when it comes to tech. on Monday with DeepSeek and everything else. We got some big earnings today, or yesterday, I should say. We're kind of digesting them today. We're looking at tech. You were just talking about software as well. What's your top pick? When we're looking at this space, are the best companies, are they in infrastructure? Are they in software? I mean, you tell me, after DeepSeek, it seems like we're just all trying to figure that out.
Yeah, I mean, there's still, DeepSeek was only 4 days ago, right? And so there's still a lot of people running around with their heads cut off trying to figure out who the winners and losers are going to be. But I think software right now, it's pretty simple. Like DeepSeek, even though, like I highlighted earlier, maybe the accuracy and the performance isn't quite where it needs to be yet. But I think over time, that's going to improve and bring costs down. And it's a deflationary development. And deflationary is typically very positive for software in general as a whole, and will lead to kind of increasing use cases and adoption, across multiple end markets. And I think names like Salesforce are set to benefit at the top. And then I kind of mentioned Atlassian, right, HubSpot, Guidewire below that, and even take a look at some of the consumption names like, right, Snowflake, Datadog, MongoDB, people that have been kind of
a lot of names there, Joel, a lot of names.